Hey everybody, welcome to the channel. Hope you guys are doing well today. In this video, we're going to be going over the Anchor protocol. A lot of reputable crypto VC firms have invested in the project, and the founder believes that within just a few months, they'll be able to pass the market cap of DAI. And one thing I've noticed the guys behind the Terra network is that they're very good about making sure that the token accrues value over time. They've done one hell of a job ponzifying the tokenomics of the Luna token. In fact, the founder himself on Twitter said that ANC's value capture will be super linear to the growth of the AUM. I'll touch on this and the reflexive nature of the protocol, and if you guys watch this video in its entirety, I'll explain how this model will lead to reflexivity not only for the ANC token but also for the Luna token. Also, if you're interested in talking about the protocol in more detail, I have an entire channel dedicated to Terra Network Talk, and by joining my private Discord channel, you can enhance and grow your understanding of the protocol by having a dialogue with experienced community members. Or if you're not into Discord, at the very least, I'd recommend giving me a follow on Twitter. It's a quick and easy way for you guys to stay up to date with projects that I'm following and get bite-sized market insights. Both the links to my Discord channel and my Twitter profile can be found in the description below. With the introduction out of the way, let's go ahead and dive into this video. Alright, to kickstart this video, let's talk about what Anchor Protocol is, what services they plan to render, and what their objectives are. Anchor is a money market protocol that was inspired by Compound's design, but instead of focusing on collateralizing crypto assets like Ethereum, BAT token, Link token, they're going to be collateralizing stake token. For the launch, they're only going to support Luna tokens, but the hope is to support other staking tokens in the future like Ethereum, Cosmos, and even the DOT token at some point. In essence, you're basically delegating your Luna token. So for instance, if you were to go over here to the app and let's say you had some Luna tokens, by minting B Luna tokens, which is basically a derivative of the Luna token, you're delegating away your Luna token and you're also giving up your potential yield. In return, you're given the synthetic B Luna token. You can take that token and go over here to the borrow tab, scroll down to provide that B Luna token derivative as collateral, and by providing that as collateral, you're able to take out a loan in UST. And the rewards that the protocol gets for the B assets, they're utilized to subsidize the deposit rate. So the borrow rate here plus the staking rewards are used to pay depositors the following rate. And the objective is to keep this above 20%. And as I mentioned in the intro, their goal is to use this protocol to drive enough demand for its stablecoin UST to top DAI circulation. And in part, how they plan to do this is by making sure that your yield is predictable. And a lot of this is going to be driven by the validation reward that are awarded from Terrazone blockchain. So again, that means from staking the Luna token. And assuming all of this works to stabilize the interest rates above 20%, then they're going to proceed to add other chains. And their hope is that by leveraging B asset rewards, they'll be able to catalyze a positive usage cycle. So these subsidies paid by the stake tokens will help maintain the high double-digit yield of 20+%. As that rate is maintained, it's going to lure in more depositors, which will lower the borrow rate, and by doing so, it'll incentivize more B asset collateralized loans, which is going to allow for more B asset rewards to be collected. Now, one of their bigger goals here is using the Anchor software development kit. They want this product to be added to exchanges, wallets, and other parts of the crypto market infrastructure. One of the big buzzwords in DeFi is composability, and that's exactly what they're going for. Instead of users coming here to the web interface, they're hoping that users can utilize the same service that they have there, which includes earning 20% on their stables or collateralizing their B Luna to take out a loan. They're hoping that exchange like Binance or KuCoin integrates that service into their exchange, or perhaps a wallet provider like Trust Wallet integrates that service directly into the wallet. And who knows, if they're able to lure in a lot of deposits and centralized lending platforms like Celsius and BlockFi can't compete, they might be forced to integrate Anchor protocol on their backend and offer the service to their users. This way, instead of earning a rate that fluctuates between 8 to 12% on their USD, they can earn over 20% interest on their USD. Who knows, through their tokenomic design, they might be able to bear-proof the Luna and Anchor token. because this time around when the market takes a downturn, a lot of those volatile assets are going to be sold off into fiat pegged stablecoins. Because of the very high rate that they're offering on UST, many traders might be encouraged to cash into UST and stake it in Anchor for a savings account. The minting of more UST would be very bullish for the Luna token since it's bought and burned to mint more UST. And it would be also very bullish for Anchor because some of the interest earned by the deposits goes towards buying the Anchor protocol off the market and distributing those rewards to ANC stakers on the platform. Now let's go ahead and shift the conversation over to tokenomics. Like many other DeFi tokens out there, Anchor token or ANC is Anchor Protocol's governance token. It allows people to create new governance polls and also allows them to vote on the proposals. The ANC token is designed to capture a portion of Anchor's yield, allowing its value to scale linearly with Anchor's assets under management. Anchor then distributes these fees to ANC stakers pro rata. The token is also distributed to individuals to help bootstrap borrow demand and the initial deposit rate stability. And to simplify that, here's a good visual representation. So protocol fees are charged. A portion of them come from B asset rewards and a portion of them come from collateral liquidation fees. These fees are then used on TerraSwap to buy ANC off the market, and they're distributed to ANC stakers. Now, in terms of the token supply, there's going to be a total of 1 billion ANC tokens, which are distributed over a 4-year period. Initially, 50 million of the tokens are going to Luna stakers via an airdrop, and another 100 are going to be locked up in a community fund. And within the first year, the inflation rate is projected to be 217%, and the lion's share of these tokens are going to be used to bootstrap activity on the platform in the form of incentives and rewards. And for many of you retail investors, these are probably the most relevant because a lot of the times VC firms get in early. Once there's enough liquidity in the market, they'll dump on retail investors. And that 20 million that they raised from investors, they gave these investors ANC tokens at a rate of 10 cents per token with a 6-month cliff and a 12-month vesting period thereafter. So that means for at least 6 months, they're not going to be able to dump their tokens on retail investors. The 100 million that went to the team, they're going to be put into a 4-year vesting period, which means that they're going to be able to get 25% of the tokens every year for 4 years. So that first 25 million that they're going to get, they won't be able to receive that until the end of the year. We'll see what happens, but the people who got most of the tokens, they're not going to be able to sell anytime soon. And given how popular Luna is, how popular Mirror Protocol is, there's the chance that the Anchor token could carry that momentum and post a very strong performance, especially within the first few months. Also, the bullish sentiment of the market at the moment is very strong. A lot of people are aping into newly listed tokens. And even with almost $15 million worth of tokens staked into the pool, the yield is still 400%. And the distribution yield for borrowing against your BLuna is over 400%. You couple these lucrative yields with the fact that VC and the team can't dump on you, we could potentially have a very nice run. Lastly, you have to remember that this protocol just launched. They're still trying to attract more depositors. If they're successful, that's going to provide sustained buying pressure on the token even without the help of retail investors. And typically what happens in the market is when more people find out about the tokenomics and they have an expectation that the token price is going to go up because of the value flow model, they'll buy purely out of speculation in hopes of capturing some of that growth. Now, before I give you guys my closing thoughts, let me give you guys a quick tutorial. If you guys wanted to skip the tutorial because you've done this before, feel free to forward ahead with the timestamps in the description below. But let's say you wanted to mint some BLuna on the platform. The first thing you're going to have to do is go over here to the bonds tab, type in the amount that you want to convert. Once you've typed that in, scroll down, select a validator of your choice, then go ahead and click on mint. You'll have to approve of the transaction. Once your transaction is approved, click OK. Before I show you guys how to collateralize your BLuna, I just wanted to show you guys real quick how to get your Luna back. If you wanted to use the app itself, you'd have to burn your BLuna, but you would have to wait at least 21 days in order for it to process. Or you could come over here to TerraSwap and just exchange your BLuna for Luna. And you might be thinking to yourself, well, couldn't I just exchange Luna to get BLuna to begin with? You can definitely do that, but if you look at the price there, you can see that you're not able to make a one-to-one exchange. You're gonna have to pay a premium in order to convert your Luna to BLuna. Once you've gotten your BLuna tokens, come over here to the Borrow tab, scroll down, click here on provide, type in the amount that you want to provide as collateral, click on proceed, confirm the transaction. Once you've collateralized your Luna, it'll display your collateral value here to the left. Click on borrow on the upper right hand corner of your screen. And by clicking this amount here, it'll let you know what the safe amount to borrow is. So if you want to use a loan to value ratio of 35%, which is considered safe by the protocol, you can go ahead and select that. Or if you think the price of Luna has stabilized and it's going higher, you can borrow up to 50%. So we'll go ahead and proceed to borrow this amount from the protocol. Once you've borrowed your funds, you click here on OK. Now that I have my borrowed amount, I can do a few things. I can come here to the earn page. I can deposit those funds in here and earn 21.8%. I can come over here to the governance page and be an LP in the ANC/UST pool. Or I could take my funds over to the Mirror protocol and become an LP in one of the pools that's listed here. And if you scroll down when you're on the governance tab at the very bottom, you'll be able to keep track of all your ANC rewards that you're getting as a result of borrowing UST. And to end the video, I'm going to give you guys my closing thoughts on the project. Jan Lieberman, the co-founder and managing partner at Delphi Digital, wrote a pretty solid thread on the reflexivity of both the Luna and the Anchor token. In my view, this protocol is going to go a long way in helping the price of the Luna token go up, because the 20% rate is not only going to create a demand for the Luna token, which is needed to mint UST, but it's also going to create a demand for the token itself for collateralizing all the loans on the Anchor protocol. And given that the investors, the team can't dump on retail investors, there isn't that sell pressure, at least for the first 6 months of the protocol being released. Once their AUM starts growing and they start building a large reserve, they're going to look for ways to make that excess capital productive and useful. My guess is that over time, the amount that goes towards buying the ANC token off the market is going to increase. And if we're already seeing this type of price action, I could only imagine what kind of price action we're going to see once the protocol really gains some traction. And while I was recording this video, I noticed that the Terra Bridge just got released. This is going to make it a lot easier for capital from Ethereum, Binance Chain, and other chains to flow into the Terra network. And that capital is definitely coming in, because look at the rates that you get for being an LP in this pool and the rate you get for borrowing UST. And the nice thing is, as money comes in into the protocol and let's say the yields get somewhat diluted, they're going to eventually go back up, because all that money that's coming into the protocol, it's going to generate more protocol fees, and those protocol fees are going to be used to buy the ANC token. And as the ANC token price goes up, the yield that you see here is also going to go back up. And as long as the yields stay in the triple digit range and the earn yield that you get for depositing your UST stays above 20, they're going to continue to attract more and more capital. Moreover, Terra was built using Cosmos's SDK Tendermint, meaning that when inter-blockchain communication launches on Cosmos, it's going to allow Terra to communicate with other blockchains. And I've already discussed composability with you guys and how important it is, and how they're intending to be composable with other chains and projects and wallets. With IBC, it's going to become a lot easier for them to collaborate with other protocols, meaning they'll be able to deliver the services offered on Anchor, Mirror to other protocols outside the Terra network. And from what I've read, I don't think we're too far away from IBC becoming a reality. When that happens, it's only going to add to my bullish case for the Anchor protocol. And because of my optimism for the project, I've decided to get some exposure. There's actually a few ways to get exposure to the project. I've decided to LP into this pool, and I've also bought some ANC off the market to stake directly into the protocol. And if you want to know what my future plans are, for example, when I tend to de-risk a little bit, I publish my moves in real time in my private Discord channel. And by subscribing to my Patreon for just $20 a month, you'll be able to get access to all 4 private channels. This way you can keep up to date with all the moves that I make. Or if you want to expedite your learning because things are moving very rapidly within the space and you don't have time to go through all my videos, by joining one of the higher tiers on Patreon, you can have a one-on-one dialogue with me. If you think you could benefit from these services, then feel free to check out the description box below and click on my Patreon link. With that, I hope you guys enjoyed this video. This is CryptoOneStop signing out. I'll talk to you folks next time. Bye.